because I won't show you. There is nothing really to show you anymore. But for example, if we take the gold, right? Let's say we just make a really basic analogy based around the RGL, and it is we do it like this. We don't take.
If I fix something like if I mark only 15-minute RGL or 1 hour.
Oh,
so
okay.
It will be okay or not?
The thing is,
yes,
depending on your time frame, your RGLs will be bigger, because look what just happened, right? Look what happened on the Nifty. Nifty is closing in a couple of minutes, right?
Yeah.
Look at this green candle with high volume. Okay.
Yes.
You say, okay, this is great because this looks like a top edge now. It looks like a top edge. We don't know, but we can anticipate it because, of course, we don't have the whole VMA concept here, but you know, this looks like it's the finish basically, and it's 3 minutes into the market. So for example, let's say you're selling below it and above it, right? So you would say, okay, great, your stop is just above previous high and let's say 5 ticks above it, right? So from 71s to 81s, this is basically your stop. 20 point stop. Okay.
Yeah.
So you have to figure it out for yourself. You have to risk, you have to kind of get your management right. So basically, if you would have sold, for example, here after the break of this RGL or at the close, let's say you sold the close, it would be 24 points, right? Full 24 points. And your profit target, I don't know where your profit target would be, but this is just an analogy. And don't say you have to trade like this, right? But what I do basically is I always have a hard stop for like 10 pips hard stop. And the thing is, what really is important in trading is your risk management. I realized something. Having a 1%, if you're a beginner, right? If you trade for less than 5 years, it's a no-brainer to risk 1% of your account because you will have more losers than winners in your beginning. And Ray says, if you only risk a 10th on your account, so not 1%, but 0.10% consistently, you have to lose 10 trades in order to lose 1 whole percent of your account. That's 10 trades. You can make 10 trades in a low time frame, you know. It gives you a lot of opportunities. And even just imagine, even if you risk now 1.5% on this trade here, now you sold this here, right? And your stop is at 80s, right? You would say, okay, what is my potential, right? Like from this point here, what is my potential? You marked out this order block here, right? This is where you would like to start buying again because this is an aggressive sell. But look, you just have a trade-off, like of what? This is a full 4-to-1 trade, right? And it means you make almost 0.5% on a 10% on a 1 to 10%, right? So you risk 0.10 and you make 0.5. And imagine you do these type of trades every week, okay? Like every day. Let's say you make every day a trade like this, right? And I know the Nifty doesn't give you much, but imagine you just imagine for a second, okay? I'm deleting everything. You have taken this buy trade here, okay? This here. And you would just stupidly buy in here. I know it doesn't make too much sense, but you would have made over 1% just today if your stop loss would be like, I don't know, maybe below this order block here, right? Like, okay, it's a 3-to-1 trade because your stop is a little bit bigger. It's a 5 minute, not a 1 minute, but you can always, this is the thing, I don't know if you can go break even. I'm not too sure about that. But usually what I do is once I'm in profit, right? Like for example, let's not take the Nifty, let's take this here and look what happens at this top edge, right? It's getting crowded. Like you see that there was no red candles forming in here, right? No small red candles. But look at this here. This is becoming really compressed now. So obviously what I'm looking at is now if you know this is what Ray is teaching. If you get the best price always, if you know what you trade, you don't even need a stop loss. You can put your stop loss right into break even, because this is the point where you can start to fade these level 2 liquidities, right? Because imagine you would have sold this here, down candle, down candle, down candle. You could go break even easily if you have good spreads, right? And even if you sell this up candle here, you can go break even easily. Even if you sold this candle here, you could go break even easily, right? And look what happens now. Price is coming back. Guess what I will wait for? I would still wait for my measured move, right? I mean, I'm waiting for this measured move since the London, since the open, you know, since here. Since here, I'm waiting for the sell, and I didn't took a trade yet. I didn't trade yet. I mean, I could have taken the buy with the interns exercise, because obviously it's still buy side, right? But you see the VMA, it's coming closer to price.
Yes.
So this tells me something is happening, and I just have to be aware of it. And of course I can do my box a little bit of bigger, because this is a quarter figure. If I, yeah, this is a quarter, like I could mark this level here out, and I will. But like this is the thing, you have to always try to take the best. Look what happened, look what happened. Okay, it didn't came even close. You can argue, okay, you can argue with it, you can argue with it, but this is what I previously drew in, right? It took stops. It's approximately a measured move. It's not perfect, okay, but it almost hit the 50s, almost hit the 50s. Maybe it hit the 50s on the futures, right? But it took the liquidity on a big large candle on high volume compared to the other volumes, because volume is very subjective, you know. Volume is something that you would like to see. For example, like this, if I take the Nasdaq, right, you would like to see something. If I just take everything off right now, and even the price chart, you would just like to take volume that looks okay. I have to take a different chart. Like for example, let me take the UKX. Yes, something like this. You want to see something like this. You want to see a period of low volume candles, right? Low volume, because then you know there is no activity. And then this candle here. And now tell me, would you like to buy this candle here? Whatever this candle is, would you like to buy?
Yeah.
Maybe we would like to buy it. Let's see. Could we possibly buy it here? I don't know even where the price is here. That's where the price is. I have to put the arrow down. Wow, 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 wow. What is happening actually here? I really compressed the price. Okay, I'll just let everything. I will just wait for the volume. I will just wait for the volume. Look, we bought it here, okay? Well, it's not the best price. It's not the best, but look what happened. It went up for the time being, right? If you imagine you would have no stop loss like a bank, right? You would just buy this volume. You would have a loss, okay? You would have made some, of course, some drawdown. It's actually this candle here. Actually, oh no, it is this candle. So you would bought the close. You would have one candle of drawdown, one green candle. You would be in profit here. You would be in profit here. You could potentially move to break even. I don't know, but still okay. Maybe not the perfect example, but we're just eyeballing it. You know, it's not like it's a real exercise. We're just trying to, how can I say, like this here, for example, right? This is today's market. Could we buy this here? Well, let's see. Oh, why? Because it's at a high price, right? We cannot buy this here, because this is what I told you previously. You get a fast green candle and a red candle. So If it would be a green candle, we could potentially sell it, but since it's at a high price, we can never buy this one. Even if it goes buy side later, we can't buy it.
This is profit booking, not withdraw.
Yeah, exactly. You have to think about it like this. Is this a measured move or is it not a measured move? Because if you take swing low, swing high, it's somewhat of a measured move, you know, if you take the swing low, the swing high. But if it's at a high price, it's likely going to be profit taking from this big green candle here, of course, because this is obviously the London Open and it has lower. But what we can do is we can just mark out this candle, or at least this area, and we can say, okay, maybe we can look for potential sales. And if we sell the FTSE, we can actually buy the GBP USD, right? So maybe we can buy now the squeeze trade. We can buy the squeeze trade. For example, if we take the VMAs here and to say, well, you know, price is coming close to the VMA, but maybe there is one big squeeze, you know, this might be the one big squeeze, but we don't want to buy it here. We want to buy it actually above the 50. So we're just waiting at the moment. So nothing special, nothing special. I'm still waiting. I'm doing nothing. I'm just observing price. Look what happened to the Nifty. This is post Nifty. As you see, this is a little bit different because this candle opened, this candle closed green, this here closed red. Well, no, I will just let this one and let this one go. But you see, we had high volume. This is what I want you to remember. We had high volume at a high price. It's likely going to be positioning of the commercials. Likely, because just as well as this red candle is commercial buying, right? And of course, yes, this is a green candle, but it's at the bottom edge. So you have to make a picture out of this, right? Where is the candle? Where is the candle? Where are all these candles? Look, even if you bought this candle here, you could make a little bit of profit, right? Even if you bought this candle here, like you would have 1-2 minutes of drawdown, and then you would be fully green. And if you sold, for example, I'm just doing a stupid analogy. It's not really practical. But if you would start to sell into this top right after this liquidity, because of course profit taking, whatever, you could actually make a little bit of money, right? Even a little bit. I'm not saying you're gonna be a millionaire doing this, but you get the concept, right, of the volume. Like
Yes.
it's good because every time you see high volume, you know there is a trade, there is a trade, there is a trade, there is a trade, there is possibly a trade, because we don't know, the market is closed now. And I can go back as far as I can, and I would just put this off. And
Actually, what I am focusing in today, I mean these days, that if my RGL is collapse with 50 or 75, then I think that this is my trade. So
yeah,
but
you
say
have to
that
build an idea around it.
a little bit hard trading. Yeah.
But you have to, like, for example, if you take the VMAs, right? We can only, obviously, today, in this day, right? We can only be a buyer from this point here, from this cross here. We can only buy, right? And we have, all the candidates are just green volumes, right? So we cannot sell it, but we can actually buy these, right? Because obviously, yeah, okay, price is crap, right? The price is really bad, but let's say we would buy these. Look what would happen. Of course, this is like completely trash, right? You would buy this crap price. Doesn't make sense. You would bought this crap price, okay? You would have bought even this crap price, which made you actually a little bit of money. You would bought this crap price here, and you wouldn't have bought this because this is the next day, right? It's the next day. But look, it doesn't matter where you buy it, right? After the cross, because at the end of the day, every of your position is actually green. Funny, right? It's funny.
Yes. Yes. Yes.
Because at the end of the day, you're still green, even though you bought the worst price possible just because of the EMA. And now just imagine you would have bought it at a logical price area, like an order block or something at a 50 pullback. Like there are a lot of these, right? After the cross here, this is the cross. This is where the cross happens. The price is rallying. Where's the 50 pullback? You take swing high, swing low. This is not a 50 pullback, but this is a 75 pullback, right? And once it's above the 50, you try to buy this 50 or at least somewhere in the 50, waiting for the high to get taken out. Then you take the next swing low and the next swing high, and you say, right, where's my 50? My 50 is approximately in here, right, where the other level is, right? And you just buy the pullbacks now. You don't buy the high volume, you buy the pullbacks. And what you end up with is actually, wait, this is the pullback here. This is the 50 again. This is the 50. Then you take this swing low and this swing high. You see, all I'm doing is I'm taking the brackets higher and higher, and I'm just marking out the 50 pullback. I'm not doing more than this. I'm just taking the bracket up, taking it lower. I'm just marking the 50. And now imagine you would just buy the pullbacks. Just the pullbacks, and look what would happen in this phase. It's fucking ridiculous, actually.
Yes.
I mean, of course, if you would hold for this long, but you see, this is how you start to catch a trending market based on just the moving average. And the moving average is funny because Ray said this is what the institutional traders first looked at when they started to develop the algorithms. You know, they said, okay, this may, they tried to make the algos are just liquidity hunting, right? So they're just searching for liquidity. And if I believe the algos have something to do with these moving averages, but with logic, you know, with liquidity. You have to understand the concept of liquidity. And this is really important. Most people don't understand the concept of liquidity. This is the thing.
50 pullback situation. So
Yes,
price touch 50, should I wait for some kind of confirmation, like it should take an old low, or I should just buy because this touch 50?
well, you can make rules, right? This is the thing. For example, I make the rule, I'm only a buyer of this market as long as price is above this here and this blue line is rising. So this blue line is not rising, but we're above the 50, right? So what I'm doing is I'm marking out my measured move, of course, and the next key level. And I'm saying, okay, I cannot buy this right now.
What I'm trying to ask, that you said one time that price should make double bottom at 50, then go up. So we should wait for double bottom, or
No,
we
that-
should just touch just touch the 50 and we should click the buy button.
Oh, never trade the double bottom. You know, always trade liquidity. There are like there are different concepts, right? There are different trades, but all the algo trades are based around liquidity. Always think in terms of liquidity. For example, if I just take the 50 here and like, for example, price is doing something like this. Price is going up, price is going down, price is going up, price is going down. This is a balanced area, right?
Yes.
And for example, if you see something like this here, price is bouncing away from the 50 towards the 25, back to the 50, like this here, every swing point creates liquidity. You see that? There's liquidity everywhere on this chart. And if
Yes.
price is doing something like this here, right, takes out this liquidity here and rejects it back above the 50, what just happened? Level 2, right?
Yes.
Because it came back above the 50. So these buyers are actually stronger than the sellers, and what will happen is price will come back to the 25 and it will start to do the same thing at the 25. It will start to do something like this, and then potentially do something like this. It's always about the pattern, you know. It takes liquidity again and it rejects, and boom, it just goes. So, you know, it's how can I say? I just deleted everything. Hold on a second. Man, I'm telling you, I have serious issues with my gut today, man. I'm like, oh, I have so much pain in my stomach. It's not even funny anymore, man. I'm telling you, it's not funny. It's not funny, man.
You have eaten something bad, I think.
I don't know, man. You know what I did? 2 days ago I took a bath, a magnesium bath,
Okay.
and I think I took too much magnesium, and my body is not really liking it. And I'm telling you, boy, it hurts. It hurts a lot, man. It hurts a lot. I hope it ends very soon.
Yeah, I think you should look for some homeopathy kind of medicine that is very good for stomach.
For what?
Homeopathic medicines.
Homeopathic medicines. Homeopathic medicines. Let me Google that. Homeopathic.
You never heard
medicine.
about this. I mean,
What?
this is very famous, like German medicines. This is kind of a different level, different kind of treatment.
You
This
mean
is
plant
not
medicine, right? You mean plant
yeah,
medicine.
this is like plant. Yeah, this is plant medicines.
Like, for example, which kind of plant which can I use? Like camel maybe or something?
You can refer to homeopathic doctor in your area. So,
I hate doctors, man. I'm telling you.
so I
uh,
think there is a medicine called Nux vomica. So it is good for stomach, but in homeopathy, there is a thing that every symptom have different medicine. So
okay, yeah,
I'm
I understand.
think that this is right, but if you always have problem regarding stomach and something like so give it a try like homeopathy, because this will never hurt your body, but this is like very good kind of treatment.
Yeah, it just really happened like 2 days ago since I took the bath. So the day I took the bath, I was okay, but the day after it was terrible, and now it is terrible. I can't even eat, man. I'm telling you, like I'm eating, right? And I have to go to the toilet instantly. And
Okay.
I think I'm just gonna relax today. Right now, oh my God, I
So
have to do some kind of tea or
you,
something.
you must look for a homeopathic doctor. It must be in your area, and you will be like feel super good, believe
Okay,
me.
man. I think I will do that today.
And this is
I
also
have
cheap.
time. Okay, I will have to do that because this is not a good pain, man. I'm telling you. Right now, before like tomorrow, today in the morning, it was pretty good, but
Yeah.
it's now getting worse and worse, man. I'm telling you. Okay.
So
Okay.
take
So look what
rest.
happened.
This
Oh,
is
look
okay.
what
I mean, this is too much concept. Take rest. Take rest. Okay.
what take
Take rest.
rest. Yeah, rest is really important. Though. Should do that too. Okay. So look what just happened, right? We just uh, had this was basically the level 2, right? This was again a level 2, but we couldn't take trade. We could have taken the trade in these two down candles. I mean, I was talking about my pain while this happened, but doesn't matter. So you see, this line is trending up, and yeah, we can take it like this here. We can make it a higher position. Basically, it doesn't really matter too much. But yeah, now we can start to actually look to buy this down candle here. It depends on the close. We always have to watch the close, right? The close is important because we can't do anything else except for buying at the moment based on the interns exercise. So you see what happens, it trades back towards the 50, it trades towards the 50, and it just became a commercial level, right? You see that?
Yeah.
Look at the volume, and what did I tell you? When it hits this level and it trades below the 50, it becomes a commercial level. So this becomes an RGL now. So this candle close here becomes our RGL, and we're not looking to buy it anymore because it will likely not make this target. It will likely not make this target. will not make this target. I'm telling you. I can tell you, I can guarantee you it will not make this target. So you obviously saw what happened, and we're below the 50 now, and we're coming close. We're still not selling it, we're not buying it. We're just waiting. We're just waiting. And of course, what's funny is if you take this here, you come back to exactly this 50 line here, right? Obviously,
Yeah.
because this is a measured move of the previous balance area. And if you take this balance area here, this swing high and this swing low, you obviously come to the conclusion that this is approximately your target zone for selling. And it looks like selling because this was a really fast candle on high volume.
So
And
why this is not a selling trade? We are already below 50, and you said
yes, yes,
that
we are below 50 and we saw the commercial, but based on the interest exercise, we have to wait until price crosses the 50 and the 200 EMA, and the EMA is rising and then falling. Okay, so at this point, once it goes below it, we can start to look for sales because this becomes a momentum trade. Because right now, everything can happen, right? Maybe it will even fade top edge. We don't know, but you see, we know there's a commercial. We know there's a commercial because this is a 1 minute, but look on the 5 minute. Look what happens on the 5 minute. You see, this can just become a big buy trade. This could be a BSG squeeze trade now, if you think about it on the 5 minute, because or on a 3 minute. This is, it really depends, you know, it really depends. But you could say, okay, you know what, this is my order block here. It depends on your risk appetite. If you're really a risky trader, you can say, okay, you know what, I'm selling this here, and yeah, this, I mean, it looks like a top edge, right? It looks like a top edge because the whole day is green, green, green. At some point, it must be selling. You just have to figure it out. You just need enough evidence. Like you're investigator, you're investigating, is this a good enough price for me to deal or is it not, you know? This is the thing. Like for example, look, we just rejected the 50 again and we're waiting, we see some selling, we see some selling. It's coming here, it's coming here, it's taking out the bottom edge. The sellers are under pressure now. The buyers, the sellers, they are good, you know, the sellers are good, but the buyers here, they're not good. So the buyers will have to do a lot of work to defend this position here. But since it's a high price, nobody is buying a high price, right? Why would you buy a high price? It doesn't matter. These buyers will likely recognize, hey, okay, the trade is done. I will take my first loss because as I showed you here, where is it? Remember, your first loss is your best loss, right? So if anybody bought here, they say, okay, you know what? It's time to leave the trade. And if they leave the trade, guess what happens? The price will just fly through this area. It will really fly through this area back to this level here. And even if we sell the breakout, look, for example, we sell the breakout now, okay? So once this breaks, this blue box, right, we will be selling. Not yet, but like not really order block, but it doesn't have to do with order block, but we're just going to be like, once this blue box breaks, okay, you're just going to sell it. It sounds stupid, but it's not to make a profit. It's just to understand liquidity, because we see the 50 put, this was the 50, right? And now we are below the 25 even. So what you can do is you can take the BSG squeeze trade, which is obviously this order block here. So if you see a green candle coming
when
to the
price
zone,
took the buyers stop, why it again goes up like retracement?
well,
what
you
is
don't
it?
know. You don't. We really don't know. Maybe it's because the algorithms just detected something. Perhaps the commercial that came in from the top right, they could have said, okay,
Target
there is something. And
yeah.
if people are buying in here, right? If some people try to really buy this in here, they say, okay, they need buyers at higher prices, you know, they need buyers at higher prices so they can sell to them. And this is what the concept is about. So you see right now,
this is not a sell trade. This is not sell trade because price did not take lower side liquidity.
Yeah, exactly. This is, at the moment, it is not a sell trade still, because the EMA is rising, this here is dropping. So we have no trade. We have no trade, even though we could have, we can't even sell it when it breaks. You know, this is the problem, because it could create a level 2 liquidity. It could do something like this. It could take out the slow bounce from this EMA, go higher, right? Really high, like a big withdrawal of liquidity,
Yes.
and then drop aggressively. Like it could do something like this. It could do. I'm not saying it will, but obviously you see we're below the 50, and if we're below the 50, these buyers are weak. Who bought here, and you're just waiting for them to get squeezed. We don't wait for nothing else. We're just watching the market, basically. We're just watching and watching and watching. And this is good, because if you watch the 1 minute chart, your eye is adapting to the things that are happening, because, you know, like ICT, for example, he doesn't explain what happens in every single candle. Like he doesn't explain what happens here, what happens here. He probably will say something like, yeah, they run the stops here and then drop down, but he doesn't, ICT never talks about the 50. The only thing ICT says is, this is discount, this is premium, but it doesn't make any sense.
Yes.
You know, this doesn't make any sense, because why should this be discount? Why should I buy here when these buyers are underwater? Of course, he's talking about a macro time frame. He's talking about like a daily. But even, yeah, okay, the SP 500 is a different type of beast, you know, like just like a crazy type of beast. But for example, if I would just take ICT's theory and say, okay, swing high, swing low, right? This is a discount. So, okay, it makes sense. This is a discount because it's a bullish market, and you can say, yeah, I want to buy somewhere in here. And this is a premium, right? But it doesn't make sense in terms of market structure, because if it's bullish, you would want it to take out these highs, right? If it's bullish. And this is the thing. On many occasions, like for example on gold, right? Like we can go back to gold and look what happens on gold, and actually we just had a nice buy side bounce, you know? Like here, for example, the EMA is crossed, we can start to be bullish gold. We're above the RGL. We have some paycheck liquidity here. Paycheck is 2 liquidity levels, so 1, 2, and we have the RGL. We have the structure, basically. We have this type of structure, this swing high, this swing low. We can take it on a 3-minute chart. We can take the 50 line here. This is the 50. We're above the 50. So yeah, you know what? We're just trying to get in on a buy trade here. We try to get a buy trade.
What you are trading, gold, oil, or currency?
I'm trading. I don't like gold because I don't fully understand it. I trade sometimes Bitcoin, and sometimes Bitcoin makes me a lot of money, man. I'm telling you, because I could show you. I took a trade from 52s, like really 52s down to 48s, I believe, like 1 day of trading, and I didn't even know it could go that far. And sometimes you're just lucky, you know. Sometimes you get really lucky with the moves, because I remember I caught the Bitcoin short from 66,000, you know. I mean, if I go to Telegram and just look at where I posted it, I think I've sent it to somebody, but I have to get okay, you know, it's been a while, but it doesn't really matter though. It doesn't really matter. I won't even, maybe I will find the screenshot, maybe I won't. It doesn't really matter. Trading view screenshots, maybe in here. I should maybe try to November, gold. Is there something with Bitcoin? Ah, yeah, here, Bitcoin here. And actually, this was just a buy trade. So you see RGLs. This was basically when I was experimenting with RGLs. This was a doji candle. It wasn't really an order book sweep, but it was a doji candle. So this doji is an energy bar, right? And it was at an RGL order block. What happened? Yeah, it went buy side. Cool. Nothing special. Nothing special. I see. So Bitcoin has a good trade because if you use order blocks and volume together, you can actually make some pretty good trades. This is the measured move. You see the measured move gets hit. It's basically done. This was a Euro trade. This is the RGL. This was basically just measured move. Price goes down. It's always the same. It's always the same thing, you know. Like, how can I
My
say?
commodity, yes, my commodity account is like active now, so I think that you can suggest me oil and gold trades.
What?
My commodity account is now active.
Ah, okay. Your account is active.
You can say that I mean you can tell me the oil and gold trades now.
Ah, okay, okay. So you can trade gold and oil.
Yes. But
That's good.
when I personally try to find a setup in gold and oil, this is like impossible for me because I don't understand too much kind of like one side moves and
Yeah,
this
in
kind.
gold, look what just happened, right? Look what just happened. We wanted to buy for the squeeze trade, and obviously the squeeze trade came in. Obviously, we didn't know where to buy it, right? But all we knew is we wanted to buy on a downtick. This was, but look, for example, let's say we just sold this close here. Like, sounds stupid, but no. Let's say we wait for the 1, 2, 3. Okay, like this is 1. We just make a 1. We wait for a 2, and we wait for a 3, and then we sell the 3. Okay, so the 3 is our plus basically. If we scalp, we just want to scalp it. We don't want to do anything stupid. But you see, this buy side squeeze was already in progress because why was it in progress? It was a higher hold. It went above the 50. It came to test these sellers. These sellers sold again. But look, it never came close to the 50. It came even to the 25, right? This was the 25, and look what happened. At the 25, these sellers realized they were on the wrong side. Somebody said, watched it and said, okay, I'm taking the buy side, and just bought in aggressively for the squeeze trade. And here, that's why the volume came in. They bought probably somewhere on down ticks here, because you see, it's always about the candle formation. You see 1, 2, 3 small candles, 1, 2, 1 large candle, and the move is basically at the same point, right? We can do the same exercise again. We have like 1, 2, 3 buyers, 1, 2, 3, 4, 5 sellers, 4 buyers. Again, who's stronger, it doesn't really matter who's stronger, who's weaker, but at this point, obviously the sellers must be weaker, right? Must be. Just like the GBP/USD trade, look what happened, right? The candle, look at this silly candle, right? This is a really silly candle because it has the same size as the screen candle on the 1 minute.
Yes.
So on the 5 minute, this is just a level 2. It's nothing more than a level 2 basically. So what we can anticipate, of course, is now that this just became a level 2 rejection, because if you now take this swing high and, for example, this swing low, we're still above the 50. For example, I'm not saying we are, but you could really do it like this, right? And this is the 50, this is the 1 point. Now you could wait for another measure because the moving average is still going up. We can do nothing, and this could be a potential BSG squeeze even because we're above the 50.
Yes.
The spring trade would be right on the 50, but you see, this is where value comes into play, because if we take value, for example, and if I just the LED1 indicator, the VMAs, for example, and I've just put value on, the picture suddenly gets really clear. Like, for example, I'm just doing it like this, and I have to into no scale full screen. Look, there was no chance that we could sell this here. The only thing we could do is buy in here, buy in here. You see it, right? And now when the curve starts to flatten out at this top edge, now we can say, okay, you know what? Maybe now it's time to sell. Maybe, only maybe, because we're still below the 50, right? We would, for a buy trade, we would have to be above the 50.